Alright, it's July 4th. I wanted to make this video, kind of go over some of the things that I utilize at the 9:30 open, for example, or the 1:30 open. So those are two of the key primary things that I look at during the day for AM and PM session. And if you see right here, it says you only need to get good at one thing, study the repeating functions. So if you're trying to master what's going on behind the scenes and you don't even have, or you are unaware of what's repeating, and you're not trying to build a profitable strategy, that's not going to be ideal for you to kind of go a step deeper. It's not going to help you whatsoever. So first things first, you only need to get good at one thing, study the repeating functions of what's happening. So if you sit there and watch the 9:30 open and the 1:30 open, and that's all you trade, you're going to get good at that. So another thing you need to be aware of essentially is, you can use the opening range gap as, the 50% of that gets traded to at least 70% of the time. You can use that. You can use new week opening gaps, which you can have up to 5 on your charts. I do have Sundays on my chart just to show you guys a little bit. So you want to be aware of that. You want to be aware of premium and discount. And then the biggest thing, if you haven't checked my pinned message in the Telegram, is the manipulation macro. So I am not one to really review these kinds of things like this or after the facts, because for testing and getting experience, for testing and experience tops everything. So you need to be aware of that. So that's why I'm not really one to backtest, but I did want to go a little bit more in depth on how I essentially create the framework for the 9:30 or the 13:30 1:30 open. Understand that I use the 9:30 open and the 1:30 open because those are 4 hour regular time hour, 4 hour candle opening times. So that's going to be, where you're getting injections of volatility essentially. So it's going to be super important. But you can also do this for, a 6 a.m. candle, a 2 a.m. candle, or the 22-hour candle in Asia, for example. So first things first, you need to understand that liquidity is what books the market. That is the most important thing, and that is why I heavily rely on the buy side and the sell side liquidity. If you've seen my framework before, that is something I heavily focus on, because without that, the market's not going to book in any other direction. So if you're bullish, expect sell side to be taken out and attack the opposing in, and vice versa for bullish scenarios, or bearish. So for the manipulation macro, this is the macro right before the 9:30 openings. This can kind of help you anticipate relative with respect to discount and premium. So if you are in a premium, and I know this simply by looking at this, you're not going to be a buyer up here. If you are, you're taking short-term objectives and you're going on. But overall, if you hop on a 15-minute chart, I'll let you do that, or an hourly. You'll see that relative from this low to this high, you are obviously in a premium. So you don't want to be a buyer. Also, you do have to factor in news that can help navigate the week. So let's dive in. If the manipulation macro goes higher with respect to discount and premium, I will look for reasons to go short, and vice versa for bullish scenarios. So this is higher probabilities. If higher probability short if you're in a premium, and it gives you more of the reason to go short. So what I kind of study for is, did we take out liquidity during this time, or what inefficiency did we reach into a premium inefficiency? Did we do anything of significance? If this macro consolidated, if it just stayed somewhere like this, I am not trading it until the 950 macro. I'm not trading anything, because that tells you need to wait. But typically now, this is, you're watching this before you even create the framework, but you can easily create the framework ahead of time, but understand that, and I want to put these up here so you can be reminded during the time. So understand that in a premium, buy side gets engineered. In a discount, sell side gets engineered. And that's all the market does. It engineers buy side and sell side liquidity all day long. This is why people that go long here, because they assume it's going to keep going higher, get stopped out because they can't simply flip. But even during this time, this little consolidation, you got to wait for a key time opening, which is here. So anyways, keep these things in mind. It's going to be super helpful. So if now, like I said, I'm not a after the fact type of person. I like to view things on the basis of real time, so bear with me, because it's hard to catch this short real time unless you know what you're looking at. So that's, and I'll let you study these PD arrays that I have on here. But anyways, how to get liquidity. Obviously you can do equal highs and equal lows, but you can do session liquidity, you can do previous day highs and lows. So the higher the time frame of the objective, the bigger the move is likely to pan out. That's something you need to be aware of. But you'll see here, this is a buy side liquidity, and it's engineered in a premium relative to that range that I just spoke about, which is all of this. And you're going to see that all throughout here. So with respect to news, you do have to keep that in mind. But you have, let's see, you have the simple things is the London lows, Asia lows, things like that. But this is kind of how I would frame my framework ahead of time, before the 9:30 open. I would just say, okay, what are the easy things to point out? Which you're seeing that here. These equal highs, these equal lows, okay? Which align with, the London lows, for example. Then you got the Asia lows down here. So you can come in here, find the equal lows here, which this is going to be an inefficiency essentially. So you're going to see that there. I'd more focus on the inefficiency. As you can see, that's inefficient, and he makes it efficient there. That's the important part. When obviously, with respect to the new week opening gap, these can be used as magnets. If you find liquidity around, residing in that area, it's going to be super high probability. So that's something ICT talks about, but you want to utilize those to your advantage. And as I said, you could put 5 of those on, same with new day opening gaps, and trade based off that. You can trade off the opening range gap. There's plethora of things you can trade off of. So understand that when I see us trading into an inefficiency like this and it has no desire to get down here, it tells you a few things ahead of time. So, but anyways, back to the framework. You can simply mark these equal lows. You'll find these. This would have been a harder short at open for most people. So anyways, I go through there, pinpoint my liquidity, and I know what I'm looking at. It's going to be on you to kind of study what you actually should be focused on and the liquidity points, because as ICT has said, price runs begin and end at these times, and that's for you to study and to figure out. So anyways, this is essentially how I'd frame my framework before the open, and how I send it out. And I would go through here and identify the inefficiencies. Where is it inefficient at? The way that the chart allows you to see where it's inefficient at, where we haven't traded to yet. That makes it a lot easier for you these days. You don't have to worry about it not being right in front of your eyes. So it's just on you to study. Now there are repeating functions behind the scenes, and that is something that you will need to figure out for yourself, or at least dive deeper into and say, I've seen this before. And you don't get that by trading. You get that by watching and getting experience. So you got to get in there and you have to watch and you have to study. You know, if you study the 9:30 and the 1:30 openings, you're gonna get good at it, right? There's no way around that. You're gonna understand, like, oh wow, this just continues to happen over and over again. Like, yeah, it does, and I've helped you by simply showing you about the manipulation macro. So that's gonna be important. So, you know, right at open, we're in a premium. We drop right into this. We run into this sell side, this SIBI, before dropping lower. That's a hard thing to catch. The objective's been met, and then you consolidate. So it's like, okay, well, there's no trades after that because the objective's already been met right at open. That means you have to wait. You have to wait for more interest because, like I said, liquidity gets engineered, and it's on you to decide. Okay, where is the liquidity? Where is it actually? And you have to also understand that for ES and, you know, the divergences between those, which is SMT essentially, where are they occurring at? Where are these price runs starting? Where are they ending? Like, it's very, very important. So, please understand that, you know, you have a lot to cover, and you have a lot to study. But I'm simplifying this in the best way possible. So, here's that case there. Your case study is it goes in there, and that is you have to be on the ball there. You can't miss a beat with that one. So we'll conclude that one and go to the next one. So same thing with 1330 open. What are we to identify? Same thing here. We have the 1250 to 1310 macro, and that's going to be referred to as the manipulation macro. So please understand that. So, okay. What does this state? If the manipulation macro goes higher with respect to premium and discount, I will look for reasons to go short, vice versa for... Now, with there being no news, this is where it gets tricky and people do not understand. That this liquidity, if we're bullish, if there's news, you're going to see a downtrend essentially. You're going to see engineered liquidity the day before, or you know, with respect, it depends on the news. It needs to be red folder essentially, but you're going to see this engineered liquidity. So even with respect to premium and discount, knowing that the first set of, you know, the first objective in discount would be this new week opening gap, and that'll be on you to go back and look at. But there being no news, you have to realize, like, okay, well, we're going to go engineer some more highs, and that's exactly what happens here. So you just have to be aware of those things essentially. So it doesn't matter, the logic still applies, and it's always the same. Sorry, that got messed up. Okay, so anyways, 1250. What's it do? Go lower. So we find reasons to go higher. And okay, let's say, okay, maybe we don't want to reach up to these highs. Maybe we assume this might be the engineered liquidity. So what can we look for? Well, what do you have right there? What is this? That's equal highs, right? So your low-hanging fruit objective, this is exactly how I build my framework. And it's going to be for you to backtest and to go search for yourself, but you will see these things happen over and over again. Now on trending days, this won't happen, so you can forget that. On a trending day, all we do is drop into the true inefficiency, and then we continue higher. So, okay, so if you are to frame the idea that, okay, the manipulation macro goes lower, what liquidity did it take out here? Nothing. Okay, that says I need to wait because, I mean, you have these equal highs, but what's down here? You got the lunch lows and you have the morning session lows, right? So go ahead and shove those equal lows on your chart, and I'd simply be looking at those 2 points alone, or just that one, whatever. 1330 opens, as you can see, We didn't get anywhere, so you kind of need to wait. We did drop lower, but we didn't take out any liquidity, which means you need to wait. So what happens at 13:30 open or 1:30 open? Go in here, get in here, and we still haven't taken liquidity yet, right? So you have to wait. You don't do anything. And then what? In the macro, we go trade lower. Now, if this is the high that created here, now this is for your market structure gurus. Why would you not take a trade in here? Why would you automatically assume that this is going to be a point of reference to say, hey, well, it's long, it took out liquidity? No, it didn't. You didn't get above that. So in terms of market structure, you're not trading anything yet. You still can't even get past the midpoint of this wick, for example. So what you have to do is wait. So then you have the silver. This is the silver bullet hour for the 2 o'clock time. So you can take a trade typically any time in here. So what do? We drop back into here, go lower, and then what? There's the low that created. There's the highs that created that low. So get back above it at a key time. Look, now you're gonna think this is random, but it's not. A macro. Would you look at that? A macro that trades higher. Now, we do go take out this buy side. I did not expect that, but I was expecting at least in here. As you can see, there's your low hanging fruit objective there, and you could have been done. That's literally 50 plus points. That's more than, and you should not be trying to swing for any home runs until you're consistently getting 15 to 20 points on any of these price runs. With respect that you understand liquidity and inefficiencies to an extent. But I did want to showcase, news or no news, the logic still applies regardless. So you need to be aware of that. And most of my entries will reside in the macro unless it's a continuation of the previous macro in relative to the bias that we have. So if this macro does its thing right here, well, I assume that the next macro will continue higher. So, or at least reach into its objective. And as you see, right as I'd be exiting here if I were to hold it from here to there. And my exit would be at this objective because that's where it was met at. And then it stops. And then what do you get again? Consolidation. So you have to wait. And that's obviously market ends and then it goes in there. So same thing. We could do all of these. It is the same logic over and over again. Got your 930. Didn't take out any. You have this trade higher, but it didn't take out any liquidity. Just traded up into this premium inefficiency. So still says you need to wait. I remember trading this actually. Gets right above that inefficiency. Pulls out. Let's see, where's the liquidity? These equal highs. Or let's see, equal, and I'd have these framed up too. Oh yeah, this is the day that ES traded up all of it. That was a big SMT. Anyways, I think if I'm not mistaken, ES went and took the London highs, and we traded lower afterwards. And I fully expected that. I expected us to at least reach in here. Yeah, I shorted at the first presentation in here, which is going to be right there. So somewhere in that area. Anyways, like I said, this is for you to go back test, but do the 850 macro to 910, understand where you are relative to premium and discount, have these magnets of where liquidity would be at, because I traded to this low from here, which wasn't a lot, but it was more than, is more than enough. I stopped after that because I didn't. Price action was crappy through here. So, anyways, with respect to premium and discount, go in there, see what the 850 to 910 macro is doing, see what the 1250 to 110 macro is doing. Use this logic. And please refer to my Telegram to get a better understanding. But if the manipulation macro does this, expect the opposite. With respect to discount and premium, I promise you, you will start to see repeating things happen. You can do this for any 4-hour candle. You'll use for overnight, you'll just use the 550 to 610 macro. So you'll let it form, do its thing, and I'd ideally wait for 650 to 710 macro for any trades. Same with the 2 a.m. candle, things like that. So I hope this helps. It's not so, I do not like to really back test a lot. I will do it more if people like it. So if this is something you want to see more of, just let me know. I would love to continue making videos in the best way that I can. If it helps you guys out, I'll do it. You know, I definitely have a passion for helping others. I'd say the most important thing is if you want to anticipate any type of reversal, check the divergence between ES and NQ. That's the only thing that I would add. That is one of the biggest things that I watch relative to, London lows and London highs being taken, ES highs not, or London on ES highs been taken but not on NQ, or Asia, or previous all-time high, etc., etc. It's for you to kind of study and learn on your own, but that is one of the most important things, and that can happen outside of the macro or inside of the macro, and you just have to study that. So if you have any questions, feel free to ask. Please like and subscribe, and I'll talk with you guys next time. Thanks.